welcome to Unit 4. Let's start with our overview and outcomes for this unit. In this unit, we're going to talk about reporting and analyzing receivables and long-term assets. Unit 4 will present accounts receivable and long-term assets. The unit will explain the accounting procedures for both types of assets. You're going to learn the concept and importance of accounting estimates as they relate to accounts receivable and other long-term assets. You're going to learn about uncollectible receivables, how we have to estimate that, also how depreciation is an estimate that we use for our long-term assets. You're also going to learn about the method of accounting for asset acquisition and disposal, including the concepts of gains and losses on the disposal of long-term assets, along with proper accounting techniques. After you complete this unit, you should be able to describe the appropriate accounting methodology for the creation and disposal of accounts receivable and notes receivable, analyze uncollectible receivables, and prepare the proper accounting entries as they relate to the write-off of uncollectible receivables. Discuss the principles of receivables management, explain the concepts and computation of cost recovery, including depreciation, depletion, and amortization. Record changes in accounting estimates and compute financial ratios that analyze accounts receivables and long-term assets. Now, as we progress through the unit, we move on to our Unit 4 readings, and basically this readings is going to include decisions related to reporting and analyzing receivables. Accounts receivables is usually a significant asset on our balance sheet. Receivables are important because a large portion of sales are credit sales. As a consequence, companies must carefully scrutinize their receivables balance and manage them carefully. And this unit provides the accounting and management of receivables. Also, making the right decisions regarding long-lived assets is critical because these assets represent significant investments for the organization. So this unit includes two different types of categories: plant assets and intangible assets. Plant assets are property, plant, and equipment, physical assets, whereas intangible assets include copyrights and patents. They lack physical substance, but they can also be extremely valuable and vital to a company's success. So some topics that we're going to talk about are accounts receivable and notes receivable, disposal of receivables, cost and long-term asset valuation, additional capital expenditures, disposal of plant assets, natural resources, intangible assets, cost recovery, including depreciation, depletion, and amortization. And then we move on further into our unit, and we see we have a unit for discussion, as well as we typically do in most units. Then you see we have learning activities, and again we have the Unit 4 assignment, which is our case, the second part of our case, and we had discussed this in our seminar as well, and so hopefully now you have a bit more clarity about that. And if we continue through our Unit 4 here, you see the preliminary lab instructions, our preliminary lab, the main lab instructions, and then the actual completion of the main lab. And once you do all of these learning activities, you come to the end of our unit. And so basically, hopefully by the time you get here, you have learned how to present accounts receivable and long-term assets. You also know the correct accounting procedure for accounts receivable and long-term assets, and the importance of accounting estimates as they relate to these assets. So hopefully you've enjoyed this unit. Thanks for watching.